We believe a slowdown in Asian exports is imminent, firstly because our export leading index has now declined for 2 months in a row. But also in this report, we give 6 reasons why we believe there's darkening clouds. One is global growth has peaked and is going to start slowing. Secondly, China's economy is showing more and more signs of cooling down, a big export market for Asia. Thirdly, the electronic cycle has been very strong, but we believe that will start rolling over. Fourthly, trade protectionism, particularly around China. Asia is very exposed. Fifthly, a lot of Asian countries have had to start raising rates, which is starting to weigh on the economies. And sixthly, oil prices have stayed high for a long time now. Asia's a large net importer of oil, and so that is also costly for these economies.
We believe export-oriented North Asia growth will moderate due to tighter financial conditions and elevated global trade protectionism. South Korea, Taiwan, and Hong Kong show early signs of losing growth momentum as they have highly sophisticated supply chain and financial linkage with China. Domestically, higher minimum wages in Korea should be negative for job creations. Hong Kong housing market remains vulnerable to the US monetary policy normalization. In response to growth slowdown, we expect the North Asian government to implement fiscal stimulus as there is very limited room for monetary accommodation.
Yes, we forecast China's economic growth in the second half of this year will slow because of 3 reasons. First, export growth will slow because of appreciating the renminbi in 2017 and an imminent trade war between China and the US. Second, China's property investment growth and infrastructure investment growth will likely slow because of Chinese government's deleveraging campaign in the past year. Finally, I believe retail sales may slow because Chinese people speculate too much on new homes.
Well, there are 3 reasons why we think India's growth will slow down. One, domestically, financial conditions have tightened quite significantly. Second, higher oil prices is a negative terms of trade shock. We think that will hurt consumer discretionary demand. And third, global trade volumes, if they do slow down because of weaker China or trade protectionism, that will have a negative impact on India's exports as well. So on the whole, we think India's growth will peak at between 7.5% to 8% in the second quarter, and we see it slowing down to around 7% in 6 to 9 months' time.
Yeah, the slowdown that we're expecting is mainly going to be led by a weakening of export demand. So that means that the Southeast Asian region will be affected as a whole, but more so for the small open economies of Singapore, Malaysia, and Thailand. We're already seeing some signs of that in the latest export numbers. And we expect that to continue in the months ahead. For the more domestic-oriented economies of Indonesia and the Philippines, they're insulated somewhat, partly because they're doing a lot of reforms, but also there is some momentum in terms of the infrastructure projects that they have started to implement.